Hi Zach, my name is Nancy Whistle. I am an advanced certified pro advisor with QuickBooks, and I just wanted to thank you for giving me the opportunity to support you with this video tutorial. And I wanted to let you know that if you need any support with either this tutorial or maybe with another transaction that you need help with, please don't hesitate to reach out to me. I appreciate the opportunity, and I'm hoping that this will solve all of your problems and questions.
Okay, so the first thing that I would do in order to keep the auto sales separated from the auto repair is I would turn on class tracking, which if you go to Edit and Preferences, choose the Accounting, and then go to Company Preferences. In this area right here where it says Class, you're going to enable this by putting a check in that box. Use class tracking for transactions. And what that's going to allow you to do is you'll be able to run a financial statement just based on the class of auto sales. So we'll need to set up a list of classes, which you can either do two. That my choice would be to do two. I would have auto sales being one class, and auto repair or alignment or whatever you want to call it for the other class. That way you can keep the two completely separate. You can run a financial statement just based on the auto repair, just based on auto sales, or you can do one that's consolidated with both. So in order to establish your classes, now that you've turned class tracking on, you're going to go to Lists, and then you're going to go to Class List. And that's available after you enable the class tracking. So down here where we have this little button, I'm going to click the down arrow here, and I'm going to create a new class. So the first new class, we'll call it Auto Repair. And the second class will be Auto Sales. So going forward, you're going to want to designate a class for every transaction, whether it's auto repair or auto sales. By doing that, you're going to be able to make sure that the J and K alignment has a break even with the auto sales, and that the profit moves over to Zach Meyers LLC. So let's move on to number one on the list of transactions that you would like to know how to enter. So that is Zach Meyers LLC loaning money to J and K to buy a vehicle. So to record the loans, what I'm going to have you do is go into your chart of accounts. So you go up to Lists and you go Chart of Accounts, and you're going to go down to the bottom left hand corner and choose New. We want to set up a new loan account, so we're going to click that radio button there and continue. And I want to name this account Loans from Zach Meyers LLC. Now this is going to be what we call a parent account. So within that account, we're going to have a sub account for each vehicle that you have a loan on. So I'm going to assume when you give J and K Auto funds for a vehicle, they're going to deposit in their bank account. So we'll go to Banking, Make Deposits. I'm not sure how you've set this up, but I'm going to guess that you're going to deposit it to the bank account for the auto sales. So just make sure that that is whichever account that it's being deposited to, that's the account that shows here. It's going to be received from Zach Myers, and since this is the first time that I'm entering the name into QuickBooks, it's gonna have me set up the name. So I'm just gonna do a quick setup with the vendor. So the account that I'm gonna put this to, I'm gonna create a new loan account. So my preference in this type of situation would be to create the name to match the VIN number, and that way you know which vehicle the loan belongs to. So when I type that in, it's not going to recognize it. It's going to ask me to set this up in the account list. So this is what we call entering accounts on the fly. You're doing it within a transaction. And so it's a loan, and we're going to go over here. We're going to make it a sub account of loans from Zach. And it's important that you put it in as a sub account. If for some reason it gets created and it's not made as a sub account, that's something that you can do later on. You can make it a sub account later. You can put maybe year, make, and model in the memo if you choose, or whatever you choose. You put the check number if it's a check, or you can choose cash. If this drop down, you can see you can choose the type of payment that was made. Class is very important. It's something we talked about before. So we're going to make this auto sales, and let's just say this loan is for $5,000, and we're going to save and close that. So now I'm going to do a second loan. So we're going to go banking, make deposits. So we're getting a second car. Of course, make sure that the bank account is correct and the date. And then the received from is going to be Zach. The from account, we're going to create that again. We're going to do the VIN number. So we're creating another loan because this is for a second vehicle. So we're going to do setup, loan, continue. Automatically populates the name that we typed in, and I'm going to make it a sub account of loans from Zach. Save and close. We can do year, make, and model here again, or you can leave it blank. The more information I think you have, the better off you are. And we've got a check number, payment method, the class again. If you just type in sales, it'll come up with auto sales. You can just choose that. And let's say this one is 3,000. Save and close. So the place that you're going to be able to look at these loans is on the balance sheet. So if you go to reports and you go to company and financial, you go to balance sheet. Here is where we're going to see the loans. So the bank has $8,000 because we told the bank that we deposited $5,000 and $3,000, which were loans from Zach to J&K alignment. And here are your loans right here. The first car loan is for $5,000. The second car is for $3,000. So you can clearly see that there's a balance left on those. So now we're going to close this out. And we're going to go on to number 2, which is Zach Myers loaning money to J&K to buy repair parts for that vehicle. So let's say on the first vehicle, we need $350 in parts. So we're going to do the same thing. It's going to work the same way. We're going to make deposits, make sure it's going to the proper bank account and the date is correct. It's received from Zach. The account is, we're just going to start typing in the VIN number, and it will automatically populate with that particular loan. So the one that's green, if I choose that, that's going to be correct. You can put a memo in here for repair parts, and you can put in the type of parts that it is, your check number. And the class, of course, is important. We've always got to put the class in here. And $350 in parts. Save and close. So now if we go back to that balance sheet again, we're going to see that for the first car, now not only do we have the $5,000 loan for the vehicle, but the parts of $350 has also become part of that loan. And if you want to see what makes up that loan, what makes up that amount, if you just put this little magnifying glass on top of the dollar amount and double click, you get a listing of the transactions that are incorporated within that dollar amount that you clicked on. So you can see that we have the two loans that were made, the $5,000 loan for the purchase and the $350 loan for the auto parts. And if you create memos that make sense to you, you'll be able to just look at this right here and be able to tell what makes up the amount that you have put into that car already. So we can close out of these now. Then the next item on your list is loaning money from a private individual, such as your dad. These loans are going to be similar to the loans that we just recorded for the purchase of vehicles and repair parts. So we need to create a deposit. So we're going to make a deposit. Check the bank account that the money is being deposited into. And we're going to receive this from Dad. I'm just going to use Dad because I don't know your dad's name. And when I go to click to the next field, it's going to ask me to add it because it's a new vendor. So I'm going to do a quick add and make sure it's going as a vendor. And then the from account is going to be loan from Dad. This is also a new account, so I'm going to click here, add new. It's going to be a loan, continue. The loan name is going to be loan from Dad. So you can put in a memo of what the loan is for if he would like. We'll just put in a check number here, check. The class, I'm going to guess, is going to be for the repair, but you could classify it as auto sales if that's what you want to do. And let's do a loan for $10,000. So we can save and close. And then let's look at that balance sheet again so you can see how it classifies it on the balance sheet. So there you go, there's your balance sheet. Shows you the loan from Dad up here, and it shows you the vehicle loans down here as a subcategory of loans from Zach Meyers. So by using this parent account, you kind of keep the loans for the vehicles separate from other loans. Okay. So now we can go on to number 4. J and K, buying the vehicle for inventory. So the first one we're going to do is buying it from a private party. So the first thing we're going to need to set up is an inventory account. So we're going to go up to list, chart of account. I'm going to create a new chart of account. And it's going to be an other current asset. And continue. We can call this vehicle inventory. Now this is going to be similar to the loan situation where we're going to have the parent account as vehicle inventory, and then we're going to create a sub account for each vehicle that we have. And the reasons that we do that is so that we can keep track of how much that vehicle has cost you in total. So when you are going to sell it, you know what your cost is, so you can set your price appropriately. So we're going to purchase it. So that's going to be writing a check. Whether you write a check or you are using an EFT or a debit card or whatever, you're going to want to go through the write checks feature. You're going to fill in the bank account name here, and over here you're going to put the check number, or if it's a debit card you can do debit, and then you're going to put in the seller's name. So Joe Smith will be our first seller, and we need to add him as a vendor because we're buying something from him. So that makes him a vendor. We're going to buy his vehicle for $5,000, which correlates to the $5,000 loan for the first loan that was recorded. So we're going to go to the expenses tab. Make sure you're on the expenses tab. The account that we want to put this into is going to be the inventory account, but we want to do a sub account for this particular vehicle. So we're going to want to track them by VIN numbers. So I don't want it to go to the loan account. So I started typing in the VIN number, the loan account came up. I don't want it to go there. I want it to be current asset, other current asset, continue. So I'm going to type in the VIN number here. And I want to make this a sub account of the vehicle inventory. Save and close. This way we'll have a complete list of all of the costs that this vehicle that are associated with this vehicle, so that, like I said, when you sell it, you know how much it cost you. In the memo, you can put whatever information you'd like to. We're going to skip the customer. We're going to go to class, and this is, of course, for auto sales. Save and close. Now, I know that you're asking about buying it from an auction because there are auction fees. Those auction fees are actually a cost of the car, because if you buy the car for $2,750 and there's a $250 fee, the car still costs you $3,000, and that's going to be something that you're going to want to see as an associated cost to that car. So you could record the total purchase as $3,000 in one, or you can break it out into the auction fees if you want to see those fees. Either way, you need it to be associated to that inventory account. So when you write that check, or when you record it in the QuickBooks, you're going to want to record the payment to the auction house. So it's going to be $3,000. We're adding them as a vendor because we're buying something from them. The total amount that we're paying them is $3,000. Now, my suggestion is to put that all into the vehicle inventory account, because that's it truly is what it cost you to purchase the car. Now, if you want to break it out so that you know how much was the vehicle price was and how much auction fees are, you can do that. We're still going to record it both to the same account down here. So let's do, excuse me, we're going to add the new account with the VIN number as a current asset. And it's going to be a sub account of the vehicle inventory. Now, if you want to show that $2,750 was the price that the car auctioned for, and then you can put in the memo auction price. Oops, you need the class of auto sales. And then we're going to put in the same thing here again. We're going to make sure we pick the vehicle inventory account. And then you could put in here auction fees. regardless of whether it's an auction fee or whether it is part of the cost of the vehicle or part of the price that you purchase the car at, it is a cost of buying the vehicle. So we always want that in that inventory account. So even though we've got two lines here, and if we look, we can see how much the auction fees were because it tells us in the memo, both amounts are going to vehicle inventory. So we save and close that, and we'll look at our report now. The balance sheet is where inventory sits. And so we can see our inventory, our vehicle inventory here. So we know that we have $3,000 into that vehicle at this point, which also matches the amount that the loan was for. So now we're going to go on to number 5, and we're going to buy the $350 in parts for the first car. So what we're going to do here is the same thing. It's going to be the write checks feature, whether you use a debit card or whatever. So I'm going to assume you go to the auto parts store and you're using your debit card. So we've got to add our vendor, auto parts store. And we're buying $350 in parts. I'm going to put the VIN number in the memo, and under the expense account, it's going to go to the vehicle inventory. So I want to pick out the vehicle inventory. I want to make sure not to pick the loans account. I want to do the vehicle inventory. And if you wanted to, you could name that the VIN number and then put inventory, and then for the loans you could put the VIN number and loan. That way you'll be sure to pick the correct one when you're recording transactions. Then in the memo I will put a listing of whatever it is that you purchased for that particular vehicle, whether it be parts, fuel, I don't know, detail service, any of that would be marked in the memo. And then the class, of course, is going to be auto sales. So we can save and close this, and then I want to show you the balance sheet again. So we're going to go company financial, balance sheet standard. So now you can see in the vehicle inventory, we now have this vehicle carried at $5,350, which includes the purchase price of the vehicle plus the parts. And that also, you notice, matches the amount that was loaned from Zach to J&K. So we can double click on this to drill down into the transactions, and we can see how much the vehicle was purchased for, $5,000, and then the parts that were added on. So in number 6, we're going to be selling the vehicle, and I noticed that you're going to be charging sales tax. So in order to do that, we need to enable the sales tax. So if you go to Edit, Preferences, if you look through this list, you'll see Sales Tax, and you'll click on that and then go to Company Preferences. You're going to say, yes, I charge sales tax. And then we're going to add a new sales tax item. So QuickBooks will automatically default to sales tax items. So we're going to create the sales tax item. Sales tax name, county tax. And you're going to name it whatever. Here it will be Clark County tax. So wherever you are, you might have a county tax and a city tax. And so make sure that you make one for each one. The description is county sales tax, or you could just leave it as sales tax. The tax rate, I'll put in here 10%. And then we're going to have to add the name of the sales tax agency. So county tax department. You can fill out this information if you'd like. Click OK. So now we have the county tax. And if you look through here, sales tax codes determine if the items you sell are taxable or non-taxable. So taxable item code is tax. The non-taxable item code is non. And I'll show you where you can use those in the invoices as we go forward. And most everybody owes on accrual basis. I don't know any jurisdictions that don't, but I'm sure there are some. That's something for you to check into. I'm sure you're already familiar with it with J&K alignment. And then you can tell when you pay the sales tax. So you can make all existing customers taxable, or make all existing non-inventory and inventory parts taxable as well. I'm just going to click OK here. That's up to your preference, depending on how you charge sales tax. And so now we're going to let Windows close, or QuickBooks close all windows. So now we're ready to go. So we're going to be selling the vehicle. So to sell the vehicle, we're going to create an invoice. So we're going to go to customers and create invoices. You can create a customer if you want for each person you sell the car to, or you could just do a generic customer of car sales if you're not interested in keeping their particular information for each one. So the class, of course, is going to be auto sales. We'll have the date. You can specify your invoice number. You're going to sell them one. And the item code, so we've not sold a car before, so we're going to create an item here. And if you click this down button here, you can click Add New. So it's a non-inventory part that we're selling, and just call it vehicle, whatever you want to call it. That's up to you. We're not going to put a price in here because for this particular one, I have it set up as just a generic, so you can sell all your cars under this item. And the account that it's going to go to is going to be an income account. And I would put it as auto sales so that you can determine how much you're selling with auto and how much is auto repair. So I would just set up an auto sales. And when I hit tab, it's going to ask me to set it up in the account list. And it's an income account. And that'll keep it separate from the rest of the income that comes in for the business. And then I'm going to save this item that's being posted to that account. So now I'm selling the vehicle. You could put in here description, your make and model, however you want to determine that. And let's just say we're selling that first car and we have $5,300 into that car, 350 in parts, 5,000, so 5,350. So let's sell that one for 7,500. And it is taxable. So you can see, since I've set up the tax, that it calculates it for me. So when you are going to tell the customer how much they owe you, you want to go from your invoice. And you said that in this number 6 that you're going to be collecting the Department of Transportation fees. So let's get those two. We'll set those up. So DOT fees, these need to be set up as an item as well. So I'm going to set this up. You could set this up as a service, and it'll come up as DOT fees. It can go to auto sales income. Click OK. And let's say that's $300. And we're going to make this non-taxable. So Actually, I need to go in and edit that account so that it's non-taxable, because you should not be charging tax usually on DOT fees. Okay, so let's save and close this. So the total amount that the customer owes you is $85.50. That includes your sales tax here. So we'll do a save and close. Now I'm going to go up into the list and item list. So this shows me my DOT fees, my vehicle item, and my sales tax item. I want to edit this item and make it non-taxable. And I'm going to close that. So on number 6, it says also collecting a document service fee. Okay, so we'll sell the other car and we'll add that one onto that one. So we'll go create an invoice. And it's just going to be car sales. We're just going to go to auto sales as our class. We're going to sell that car. We paid $3,000 for that. So the item code is vehicle, or whatever you want to make it. Put in the year, make, and model. Let's sell that for $4,500. It is taxable. We can do a DOT fee on this as well of $200, and then the document service fee. I'm just going to have to add that right now because we don't have it in the list yet. And I do want to add it. It's a service. It's filled in for me. It's also going to be non-taxable, and that account is going to go to auto sales as well. And we'll make that $150. So when you look down here, the 10% is only calculated on the price of the vehicle. The $200 and the $150 are services, so there is no sales tax on that. So this gives you the total that your customer is going to owe you, which is $5,300. So we'll do save and close. There's one thing I forgot to mention and do when I was creating those invoices. So I'm going to go back into create invoices, and I'm going to find the invoices that we did. So it's going to be important for you to put in the description the VIN number for each vehicle. And so I'm going to save this and then go back to the other one. So when you're creating these invoices, you need to make sure that you're putting the VIN number in, because that's the only way to track which vehicle you're selling. So now we're going to collect the money on one of those invoices. So we're going to receive a payment. So you go customers, receive payments. And we're going to receive it from car sales. And let's just assume that we are going to collect the first one for $85.50. Oops. And we'll just say we're getting a check, the check number, and then we're going to save and close. And then when we deposit that check, we're going to go to make deposits. That check's right there. We're going to check that, click OK. The class is auto sales. Save and close. Always check the bank account too that you're depositing to, make sure you have the right one in QuickBooks. So now let's receive the payment on the second vehicle. So we're going to go to receive payments, customers receive payments. We're going to type in car sales, and we're going to collect $5,300. which matches that invoice. We'll put the check number. Oh, let's just say this one was paid for with a credit card. You can ignore this part unless you use QuickBooks to process your payments, then you would fill that in. So we're going to pay this one as well. The customer paid us, so we're going to do save and close. And then we'll go to banking. We'll make that deposit as well. There it is. Make sure on here that we're depositing in the correct bank. So pick the correct bank, which would be the auto sales bank account. Save and close. So now you have created the invoices for both those vehicles and sold them and collected the money. So now we still have those vehicles sitting in inventory. So we need to move the inventory into cost of goods sold so that we are properly recording the cost of that vehicle, because sitting in inventory, that doesn't hit the profit and loss statement. It hits the balance sheet, so it doesn't affect your net income. So now we need to realize the fact that that vehicle cost us money to purchase, and so we move it from inventory to cost of goods sold. And the way we do that is we go into company, make journal entries, and so we're going to record it as a auto sales. So we got to set up account auto sales. Oops. COGS is what we call it, cost of goods sold. This is going to be a new account, and it's going to be an other, and it's going to be cost of goods sold. And type it in again here. So we're going to debit that account for the amount of each vehicle. So, or the amount that's sitting in inventory of each vehicle. So the way that we find that is we go to reports, we go to company and financial, and we go to balance sheet. And we've sold both of the cars, but they're still both sitting in inventory. So where you're going to look for vehicle inventory, and the amount of money that's associated with that particular VIN number for whatever you've sold is going to be the amount of money that you're going to want to put in that journal entry. In this case, we've sold both vehicles, so we're going to want to move $83.50 into the cost of goods sold. So the way to do that is to create a journal entry. And so you go to company, make general journal entries. You're gonna make it for the date that the vehicle sold. And we need to create a cost of goods sold account for the autos. So I'm gonna do auto sales COGS account, COGS. And we're gonna set that up here. It's an other account type, and it's going to go to cost of goods sold. Continue, save and close. So this is the account that we're going to be moving the cost to, so that we make sure that J&K Auto Sales is ending up with a $0 profit on the, or net income on the transactions that are occurring for Zach Meyers. So we want to move the cost for the first vehicle, which is right here, vehicle inventory. The cost is $53.50, which if you double click on that, you see it's the cost of the vehicle of $5,000, as well as the cost of the $350, the parts that were used to repair the car. So in here we're going to do $53.50. That's the total cost. We're going to put in the VIN number for that vehicle. It's going to be Class 2 Auto Sales. And we are going to pull that out of the inventory. So if we type in the VIN number again, we're going to pull it out of vehicle inventory right here. So make sure you're under the main category of vehicle inventory, and then you choose that VIN number. And then you can save and close that. So that's the first one. Whoops, I got to put the class in down here as well. So you can see it immediately moves that out of vehicle inventory. And if you look, you'll see it moves on to the profit and loss statement under cost of goods sold. So it shows up right here. So we'll do that for the second vehicle as well. So we're going to go company, make general journal entries, check your date. I'm going to put it to the auto sales, cost of goods sold. And the dollar amount is going to be the amount that's sitting in vehicle inventory, because that's what we want to move out from vehicle inventory into cost of goods sold. I'm going to put the VIN number in the memo and choose the class. And then we'll type in the VIN number here. Make sure you choose the vehicle inventory account and the auto sales class. And then you can see that it's no longer on the balance sheet, and it's all come through onto the profit and loss statement. So number 7, paying or transferring the DOT fees on the sold vehicles, automatic withdrawal from DOT. So that's simply going to be writing a check, which I know it's automatically taken out, but that's the feature you're going to use in QuickBooks. So ensure that you're in the bank account here. That is the bank account that they're withdrawing from. You're going to type in EFT in the check number field, and then type in DOT for your vendor. $500 is what we've collected in DOT fees so far, so we'll assume that's what's being taken out. And that's all there is to that. That gets recorded. Oops, cancel that. We'll put it as auto sales as our class. Save and close. Number 8, J&K Auto Sales writing a check for the sales tax collected to J&K Aligning Inc. So that's pretty simple. You're going to go to banking, write checks. So you're going to want to make sure you take this out of, so this bank account here should be the bank account that is set up for JK Auto Sales. And you can do this as a transfer or as a check. If it's a check, you're going to put in your check number. And it's going to be paid to the order of J&K Aligning. Quick add, or I'm sorry, not J&K Aligning. It's going to be out of J&K Auto Sales. Sorry about that. It's going to be a quick add, and that is a customer. So you would determine the amount of sales tax on the vehicles that were sold from J&K Auto Sales. So we'll just say that's for right now, just to make up a number of $350. Then the account that it goes into would be the sales tax bank account that the accountant has access to when they are paying the quarterly sales tax. So that's pretty simple. You're just actually writing a check out of one bank account and depositing it into another bank account. And because you have this bank account in the account section of the expenses, you don't have to then deposit the check, because this transaction, putting this down here, will show the transaction as a deposit. Oh, cancel, hold on. And we can do this class as auto sales because it's there. Good thing that reminder is there. So we're going to save and close that. and then I'll show you what I mean about the bank. So we're going to go to the register and take a look at, that's not the right bank account. There we go. Use the register and we'll go to the sales tax bank account. And I want to show you how that shows up as a deposit. See, it shows up as a deposit. So you don't have to record the deposit. It's already done when you write that check. So then we go to number 9, repaying loans to Zach Myers or a private individual. Pretty much that's going to go the same way. So that's going to come out of the bank account. That is probably JK Aligning bank account, whatever that account is. And you're going to write the check to Zach Myers. And for the amount, let's pay off that first one since we sold that vehicle, and the amount on that is owed on that. Well, actually, before I do that, let's take a look and I'll show you how you can tell what's owed. So you're going to go to the balance sheet and you can see that the vehicle inventory was worth $53.50, and also that matches the loan amount. So that's good. You're always going to want to make sure that those match, because Zach Myers LLC is loaning the business the money for both the vehicle purchase and for all the parts. So these two match, which is good. So now I know that the amount that JK Aligning owes Zach Myers LLC is $53.50. And so down here, it's going to go to the loan for that particular vehicle. So I'm making sure that I pick the proper memo field here, and then this is going to go as auto sales. Okay, so that takes care of that. And then for the private individual, it would be the same way. So we could do a partial payback of the loan from Dad. This is going to come out of whichever bank account you're paying it out of. It's going to go to Dad. Let's pay back half of that loan. And that one's going to go loan from Dad. Oh, and that one actually is auto repair, because that's where we recorded the actual loan in the first place. So now you can see on the bank statement, on the balance sheet, that the loan from Dad is now only $5,000, and the loan from Zach Myers is now gone. So those loans have been taken care of. Well, the loan from Dad only half, because it's only a partial payment. But you can see that when you make a payment to those loans, that it decreases the loan balance. So number 10, receiving the invoice from Zach Myers and paying the invoice. So Zach Myers is going to be invoicing JK Aligning for the profit on each of the vehicles. So for the first vehicle that we sold, let's take a look on the P&L. We're going to want to open up both the invoice, which is in your auto sales, you can see, and you can just double click on the VIN number. So $7,500 was the sales price of the vehicle. And then to find the cost, you're going to go to the chart of accounts, and you're going to want to go to the vehicle inventory. So if you had a long list of chart of accounts, you just start typing in the VIN number, and then it'll bring it up. Make sure you double click on the vehicle inventory for that VIN number. So right here, all the increases represent costs into the vehicle. So right before you sold it and moved the cost into cost of goods sold, that balance there is the amount of money that has been invested into that vehicle. So we need to take the sales price, which is $7,500, and subtract out the cost that's been invested of $5,350. So Zach Myers would be issuing a bill, or it would be an invoice out of his company, which is received into J&K as a bill. That's going to be $7,500 minus $5,350. When we hit that minus in there, that turns that field into a calculator. So it automatically calculates for us that it was $2,150 was the amount of profit on that vehicle. So into the cost of goods sold, we need to move this $2,150. So let's create an account called Zach Myers Profit on Auto Sale, and QuickBooks actually fills that in for you with the number that's up in the amount due. In the memo, let's put the VIN number, and then in the class it'll be auto sales. Save and close. So now we can close out of these as well, these windows. And when you look at the profit and loss, you're going to see that now the cost of goods sold is increased by that $2,150 that Zach Myers is billing us for. Okay, so now that we've entered that bill, now we get to pay it. So we're going to go vendors, pay bills. There it is right there. We're going to check that one that we're paying. And it could be a check that you're going to be printing, or assign a check number to it. And just make sure that you choose the bank account that money's coming out of over here. And then you just click on Pay Selected Bills. And the check number. If you print the checks, then you can just leave it checked with let QuickBooks assign it. So now we have moved the profit to cost of goods sold, so it's decreased the net income by the amount of profit to Zach Myers. So now we're going to do that for the second invoice as well. So if we go in here and we pick the second invoice, now the second invoice also has the document service fee. So my understanding is that the vehicle purchase price and the document service fee goes to Zach Myers. So when Zach Myers invoices JK Aligning, then we're going to go over here, enter bills. So it's going to be Zach Myers. And the profit is $1,500 plus the $150 document service fee. So the account's going to be the auto sales, Zach Meyer, profit on auto sales for $1,500. Class is auto sales. And then we're going to create an account for the document fees. And that's also going to be a cost of goods sold account. And that's going to go to your auto sales account as well. So we close out of all these windows and we take a look at the profit and loss. You see that the net income to J&K Aligning is $0. So now we'll move on to number 11, which addresses refunds.
So let's buy another vehicle here. Write a check. Say it's buying a second vehicle from Joe, $7,000, and make up another VIN number here. And then remember, it's important to put this into the correct inventory account. So the one that's defaulting is not the correct one, so I have to create another one. So I'm going to type in my number, tab over. It's going to ask if I want to set it up, which I do. It's going to be an other current asset, continue. And it's going to be a sub account of vehicle inventory, just like before. You can put what you want in the memo. We're going to make this auto sales class. Save and close. So we are going to record the purchase of some parts for that particular vehicle. So we're going to go to the auto parts store. Let's say we bought $1,500 in parts, and we're going to want to make sure we record that to the proper vehicle inventory account. In the memo, a list of the parts, and the auto class is going to be sales. So we'll save that. So if we take a look at the balance sheet now, you can see that you have the vehicle in the vehicle inventory now. If you drill down on the amount, you can see that $7,000 was the purchase price, $1,500 is for parts. So we're going to assume now that you have returned $500 in parts. So let's close out of here. So no matter how the money is returned, it's going to be recorded as a deposit. So we're going to make deposits because it's money coming back to us. If you get cash or a check, something that needs to be deposited from the auto parts store, then you would have to take that physically to the bank and deposit it, and you would reflect that here. Or maybe it comes as an EFT because you pay for it with a debit card. Either way, that would be recorded as a deposit. So it would be received from the auto parts store, and it's going to go back to the account that we originally posted it to, which is the vehicle inventory account. You can put the parts returned, a list of those here. And the class will be auto sales. Oops. There we go. And $500. So save and close. So now if we pull up another balance sheet, we're going to see that now we only have $8,000 in vehicle inventory. And if you double click on that, you see that the purchase of the $1,500 in parts shows up here, but then also the $500 in refunds. So that's how you would record that. Now, if you used a credit card, I'm not sure if you're using credit cards to buy things, but that's a possibility as well. You would just do it as a credit to the credit card. It's same procedure as recording that deposit, except that it goes to a credit card instead. So now we can move on to number 12, dealer renewal fees, insurance and bonds. So to record those are pretty straightforward. You're just going to go to write checks and make sure it's coming out of the correct bank account, of course. Record the check number if it's a check that you wrote, or if it's coming out of the bank automatically, you would put EFT here, or debit for debit card. I'm not sure who you're renewing those through. I don't know what the name of the vendor is, but we'll just make it dealer renewal as your vendor. And we're going to do a quick add here. Set up the vendor. Now, if you're sending checks out to the vendor, you're going to want to do the entire setup on the vendor so that you can type in the name and address as well. So let's say that it's $1,000 to renew your vehicle. Oh, I just noticed I spelled vendor wrong. It's spelled with a T instead of an R. Sorry about that. The account that it would go to is dealer renewal, and we'll set that up as an expense. Could go to could go to licenses and fees as well. It just depends on how you want to categorize that, and that goes as an expense here. So continue, save and close. You might in the memo put the license number that you have, and that goes to sales here. Save and close. You would do insurance and bonds the same way, except that you would put them to an insurance or bonds account. So you would set up an expense account for that as well. So now we'll go on to the other transactions for your company. So I'm guessing that might be Zach Myers that you're buying the work truck for, but I'm still going to use the J&K alignment if you don't mind, just so I don't have to create a whole nother file. So to buy a work truck, whether you would be buying it for your business or any other business, the way that you would record that, because you're stating that you want it as an expense, not with depreciation. So that's going to be done by writing a check. Once again, of course, check your bank account and the check number. Whoever you're buying the truck from, let's just say auto sales. And quick add. Let's say it's $5,000. Now, since you're writing this off as an expense, it's not going to sit on your balance sheet because it's an expense. And if you were buying it as an asset and depreciating it, it would go on to your balance sheet. And this is something you should definitely ask your accountant how they want you to record it, whether it's an expense or whether it should be carried on the balance sheet. But to record it as an expense, you could just put truck expense or vehicle expense, or you can call it whatever you want. Expense, continue, and close. Now, if this was for Zach Myers and you're putting it into Zach Myers books, you wouldn't need to record a class. If you're going to be putting it on to J&K aligning, then of course you would put the sales class on here. Save and close. So that's how you do that. Other expenses are recorded the same way as the dealer renewal fees, where you're just going to write a check, whether it is truly a check or whether it's an EFT. And remember, if it's EFT, the only difference is that we put EFT there instead of a check number. So let's just pick one of these. Let's do Carfax reports. And set that vendor up. Just say it's $25. So down here, I would actually make an account for Carfax reports because it's an expense that you're going to want to track and be able to look at your P&L and see, you know, am I spending too much money here? Or, you know, it really gives you an idea of a breakdown of where all your money is going. So I would do that for sure. Expense, continue. Okay. And since this is still in J&K aligning, we would put the sales class. If you're recording it just in the Zach Myers LLC, then you don't necessarily need that. It would be the same for tools. Marketing tools can go to an account called small tools expense. Marketing annual LLC renewal would go to licenses and fees. Banking fees go to bank charges. Insurance would go to insurance fees, and gas would go to a fuel account. So pretty much that sums up everything that we've got here. And if you do have any questions about anything that I've showed you in this video and you need a little clarification, please don't hesitate to reach out to me.